Hey traders, Raghi here, and to kick off the premium video, let's talk about what I touched on in the free video, but really dive into more detail about it, because this is at the heart of everything that I teach you all to do, all the different alerts that I send out, and it's really very much on the exact opposite, the polar opposite of what most traders and what most mainstream media will talk about. So we're definitely going to be non-consensus in our decisions and our triggers and in our zone. So what does even that all that mean? So think about the optimism that a lot of traders had after the market went up yesterday, right? There's talk of a bottom. There's talk about the stimulus package. There's talk about the bank CEO meeting. There's talk about, all the optimism out there. So the price action will then sort of guide the psychology and the discussions that just keep feeding on themselves. And all along, on this particular day, that light red up day, the one thing that we had, the thing that's measurable, the master market internal, the yen was weak, right? That's what we had all day yesterday. Even when the market took that little nosedive, when it looked like the stimulus package was going to be, something that was going to be way off in the distance, that the meeting of the minds could not happen, the yen still stayed very weak. And the yen still said, look, we're going to move higher. And we trust the yen. It is the master market internal. Tick, trend. Look, those are the tools of traders looking to measure the speed at which a market is already going, right? So it's like the RPM gauge on your dashboard, on your car. What I'm talking about is not the RPMs or even the accelerator pedal. I'm talking about the steering wheel. Which way are we going to go? What way is the market going to steer? So if you want to look at it and contrast more conventional tools, more popular tools, tick and trend, they're kind of like the gas pedal and the RPMs, the speedometer. The yen is the steering wheel, okay? So let's go to today. What do we wake up with? Heck, what did we have yesterday that I alerted us all to? We had yen weakness in the Asian session. Now I'll alert that out again. We had yen weakness in the Asian session, which actually set up some shorts during the Asian session. Now, what is the Asian session? You can say that generally it's the session that starts about 8 o'clock. Now, remember, you've got Auckland, Sydney, Tokyo, Hong Kong, Singapore, and they don't all open at the same time. They sort of, as a wave, one center opens until all of them are open, and that's going to be right around 8 p.m., 9 p.m. when you're getting full participation. That's Eastern. Well, earlier, the indication was what? Boom, yen strength. Yen strength means it's bearish for the equities. It's bearish for the equity indices. Yen strength is the steering wheel telling us, yeah, we're going to head south on the highway. Yen weakness was the steering wheel that told us yesterday, meaning Tuesday, we were going to head north on the highway, right? So this has nothing to do with, well, what about the ticks, Rog? No, that's the RPM. That will tell us sort of how we're driving down the highway, but the steering wheel is keeping us northbound or southbound. So I hope that kind of clarifies and makes sense. So once we ended here, this is really kind of the top of the range conversation. Am I going to get long after a day that the market's already been up? Look, if someone wants to be helpful out there in Analysisville, they can tell us to buy at the bottom of the range, and they can tell us to focus on shorts at the top of the range, right? That's the top. Here's the bottom. And there's a big difference in philosophy there. So traders looking at this up candle thinking, oh, we'll see some more tomorrow. Look at the yen. You're looking at the gas pedal and the RPMs. That's fine. But you want to know which way we're steering in. That is the yen. All right. So that's what dictated our shorts throughout the day. Now, let's go to the 1-minute chart of, it doesn't matter if we're looking at the Dow. It doesn't matter if we're looking at the NASDAQ. But I'm going to pull up the NASDAQ specifically. And so talk about what we did this morning in the chat room. And I'll cut another video specific to it later on, and I'll push it through the alerts. But what we're talking about here was the bell rings. So here's our 9:30. And if you guys remember, if you were in the chat room with me, we didn't do anything for a while. We just sat, we waited, we watched. All through here. So next thing that happened is we looked at some of the peaks on the V-score. We saw that the yen was very strong and only getting stronger. And that gave us, that's our steering wheel, that told us we're going to go lower. But what happened? Started moving higher. And you know what happens when the market moves higher. All the FOMO, MOMO, bozos start jumping into the long side. Well, if the yen is strong, what is the likelihood that we're going to continue higher? Probability says no. So we shorted this. And those of you that were in the chat room, remember, because of the way in which the swings of the market have been so much wider than the historical averages that we study through the AutoChartist volatility analysis platform, we have been using futures options or ETF options. So you buy puts in the NASDAQ futures, you buy puts in the QQQs. Now, this is futures trading, gang, and this is what I mean by that. A lot of traders are like, well, can I trade the futures here? Sure, but if the swings are wider, you have to take a smaller position or use even the micros. If the swings are wider, you have to be ready to take more heat on that position. The puts allow us to control risks, because think of it this way, especially for shorts in this environment. What if, and you have to ask these what if questions, what if suddenly we get some impromptu soundbite, impromptu interview on the White House lawn or on the steps of Congress, something where someone says, yep, we're really close to this stimulus package, we're working across the aisles and it's going to happen. The market rips higher, mercilessly, crushing shorts. When we have puts, we know the worst case scenario, down to the penny, is whatever we paid for that put. And even if we rip higher, at some point the market's going to stall out. At some point we might even retrace. And you might notice, gosh, I didn't have to lose all of my premium. Maybe I lost in a moment 20, 30, 40%, but not all of it. So even though we're ready to lose, even though we know the worst case scenario is we lose all the premium, that very, very seldom happens. So we can control risk in a different way. But it's futures trading, because notice every decision that I'm making is being based on what's happening specifically on the NQ chart. The major market for this is going to be the futures. The futures will then dictate how and when the ETFs move. Now, there's plenty of liquidity in the ETFs. There's a lot of volume. But I still don't want to use that as my primary decision-making chart. And another reason for that is those ETFs are only that teeny little 9:30 to 4 o'clock trading hours. I want to see something that reflects all the financial centers, reflects the pre-market, reflects the after the market closes, and that's going to be your NQ. But feel free to execute the trade on the NQ futures options or the QQQ ETF options, but build your trade using the indicators and the NQ contract, the NASDAQ futures contract. All right, this other circle that I've highlighted here was our second opportunity. Now, when did this opportunity become valid? And I mentioned this in the chat room, and this is sort of the marching orders for the remainder of the day. There's a few things that happened, and they have to happen in this order, okay? Really simple, though. Really simple steps. So the first thing that happens is that we wait for the high and low of the first 60 minutes. The 60-minute high-low range is what's known as the initial balance. I don't know why they call it that. Kind of seems like a weird name, but whatever. It's the initial balance. We wait for an initial balance breach, which is to say we take out the high or the low of the range. In this case, we took out the low. We traded lower through the lowest point from 9:30 to 10:30. That's the initial balance breach. That's the definition, Eastern. Right? Once that happens, I'm not getting in, but that sets more, for me, more directional bias, more conviction. And that means when we rally up to what we call the VWAP cluster, what does that mean? It's 3 VWAPs anchored to time. Anchored to time. And I anchor it to the 2 a.m., 7 a.m., and 9:30 Eastern. So it's anchored to time. That creates that little ribbon, separate from the wave, that creates a little cluster or ribbon. When we get up to the VWAP, we short it. If we get close to the VWAP, you can start to price the puts, because remember, we're giving ourselves a little bit more of a cushion, knowing that with the options, we can tolerate some of this kind of stuff. That also, when you're looking at the puts, lets you be a little bit more aggressive, because, for example, look at this, really close, didn't touch the VWAP, but gosh, it was driving down the street and it just fell short of the driveway. Right there. Can you potentially buy some puts in that environment on the NQ? That late in the day, I would tell you buy the NQ futures puts, not the QQQ, or just short the underlying futures with a micro if you'd like. A little aggressive because it's the last hour of the day, but nonetheless, absolutely valid. And you don't want to buy there. That's not the plan. You don't want to buy. Stick to the short side, wait for the top of the range. And notice what we did time and time again. We waited for the top of the range. We waited for the top of the range. We waited for the top of the range. We're not shorting like FOMO, MOMO, bozos after, what do they do? Again, I know I can sound salty when I say this, but I really want to leave a mark, right? Now, some traders, if they're able to get in on the momentum pretty early, and some do, there are really good really good momentum traders. There are good Momo traders out there, but they are few and far between. They're the ones that know exactly when the threshold was broken, sort of when that momentum is going to start, and they're in on it early. They're not in on it late. That's not what they do. They're in on it early. Now, if you're not a momentum trader, conversely, you can wait for a slight pullback like we had in here. Quick little bounce. It doesn't look like much, but I'll tell you, if you're looking for an opportunity to buy a put in the NQ, or if you're looking for an opportunity to get short the NQ, that little, let's call it a reprieve of selling, is going to be exactly the opportunity that you want. So ultimately, what happens, sadly, for unseasoned, unskilled momentum traders is they get short of the bottom. They get short of the bottom. They get short of the bottom. It's like they watch the market sell off and go, oh gosh, I can't miss this anymore. And then maybe they get in a little sooner, and then all of a sudden they get caught up in that, right? They don't have the skill that smart momentum traders have, which is to get in on that Momo early, all right? Okay, so that was our morning in terms of the NAS. I mean, it was really straight up, that's it. I got a lot of questions about gold. And I'm still in the gold calls because we have plenty of time before expiration. Did I have enough of a pullback yesterday? Did we pull back, weaken enough? No, in fact, we had some decent Momo, and then it kind of turned around, as you can see. But now gold is starting to look kind of interesting for us. So if we can get a little bit more weakness, and we closed heavy. If you're wondering, well, Rod, could we have done it today? Well, I like that we sort of closed weak. We closed heavy. And that means maybe we get a little bit more weakness, and then we can look for that buy. It's the same thing, by the way, I talked about on the Natty Gas trade. Because we closed so strong, that was a strong day yesterday. That, again, kudos for those of you that had the understanding of the trend and the patience to say, look, this is one green grab candle in a sea of red. There's not a specific natural gas narrative out there talking about why there might be greater demand for natural gas. There's no specific narrative out there saying why there might be a lower supply of natural gas. There's no supply or demand narrative out there. The only narrative is this sort of supposition, and I don't like supposition unless it's been tested and tested and tested, and therefore repeatable, is that traders might be getting out of their long positions in crude, you don't say, and they're getting long in natural gas. That's a pretty big supposition. That the oil price war that we're seeing is somehow going to benefit natural gas. We are not lacking for crude, right? There's a glut, and it's cheaper than ever. So why would traders think they can't get a hold of crude? All right, so then you might say, well, why would traders think they can't get a hold of natural gas either? So that's where I'm thinking it just didn't make any logical sense, but we knew that there was a likelihood because of how strong this candle was, closing in the upper half of even the upper quarter of the day. That's a light candle, right? Look how strongly it closed. It didn't close in the middle. It didn't close down near the lows. It was a very light, a very buoyant candle. So we thought, yeah, there's a pretty good chance we could see some more buying earlier in the session. That's exactly what we saw. So I said, everybody, we're going to have 2 days. We can buy those puts. And those of you that did that, those of you that followed the plan, those of you that saw that a sort of light, buoyant day could encourage a little bit more buying, and then you took advantage of that to get your fills on those puts, you got rewarded, and boy, did you ever, in a hurry, 2 p.m., boom, that kind of fall. Some of you asked, hey, Rob, can we take profit? And I said, sure, if you want to. I got some emails, like, I don't have a problem with that. No. Do I think we could head down lower? I think we can. But again, follow the plan. And here's this thing. We've talked about, I think, a lot of buy at the bottom of the range, short at the top of the range, right? Well, here's another one. Respect the trend that was. There are some unique, I'll call them Roggyisms, but this respect the trend that was is purely something I picked up from Charles Dow. Just because the market had a bullish day doesn't make it a bullish trend. What was the trend that was in place before that 1 or 2 days that we ripped higher? Down, down, down. Favor the psychology, favor the momentum that came before this. So for those of you that are wondering about Natty Gas, that finally worked out. And kudos for those of you that followed the plan, followed the process. Gold, I want to get into some more gold. Absolutely. I think we might see a little bit more weakness, and we'll probably look at some GLD calls tomorrow. What about bonds? Anything we can do with bonds yet? You know, again, what I want to do is take advantage of a pullback, right? I don't have enough yet, but if we can get to the 8 exponential moving average, in the vicinity of that, we might price out some TLT calls. Notice how patient I am about pullbacks. A lot of traders, when they see a rip higher, go, oh my gosh, the first time we pull back, let's get in. Notice how those traders were, for the most part, by and large, punished for their impatience. The market will sometimes inadvertently reward impatient traders, right? They're kind of the same group as your FOMO, MOMO, bozos. But for the most part, the market will reward patience, whether you're investing or trading. Is there a more patient guy out there than Warren Buffett? From a trading or money management standpoint, is there a more patient guy out there than Ray Dalio? The market typically will reward patient traders. As I like to say, we're baseball hitters at the plate in the big leagues waiting for our pitch. If it's not our pitch, we don't swing our bat. Great read if you want, especially my baseball fans out there. One of my favorite non-trading trading books, one of my favorite sports psychology authors, H.A. Dorfman, D-O-R-F-M-A-N, The Mental Keys to Hitting. I don't even think it's 100 pages long. I try to read it once every 4 or 5 months, okay? All right, gang, I ran a little longer than I normally wanted to, but I wanted to run through these processes and this mindset, because once you adopt this will all become very process driven and much easier than always having the doubts of, should I be long? Should I be short? What's the reason for that? Well, I'm hearing this on television, or I'm hearing this on financial media. You'll learn to shut all that out, and you'll learn the power of being non-consensus, not with the sheeple, as I say, not with the zombie horde. Okay? All right, gang. Thank you so much for always being a part of our team. I love working with like-minded traders. I'm seeing the light bulbs go off in the chat room all the time. I could not be prouder. I love spending so much of my day with you guys. In fact, I'm going to be jumping back into the chat room and checking out what's going on, and I'll be sending out some alerts. By the way, with day trading alerts, I'm going to try to get back to sending out those options day trading alerts. But I will tell you, I will definitely get back to that. With this volatility, we've been a little bit more hands-on deck, so to speak, with the trades, but I will get back to more of that when we sort of normalize, and I trust that I can manage risk for those of you that are just catching the alerts and not in the chat room. But if you have time on a Tuesday, Wednesday, or Thursday when I'm walking you guys through this, pop in the chat room one of those days. Heck, you don't even have to be in there till after 10 o'clock, okay? But between about 10 and 11, I'll put the bulk of the trades on, and when you see this in real time, I think it's going to help a lot. Okay, gang? I'll see you in the next update.